Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, where news investors are suddenly heading for the exit, seeking safety. Volatility returned to Wall Street with a vengeance overnight, with the VIX jumping to a 24-day high and the US Treasury 10-year benchmark bond yield slumping to a 45-day low. Driving the mood swing was downbeat guidance from JP Morgan and rising worries over the Italian situation. Wall Street is having its biggest one-day drop in a month. The Dow is down almost 2%, the S&P 500 down more than 1.5%. These are major retreats in confidence by equity markets, and they come after 0.5% falls in Asian markets yesterday and more than 1% falls in Europe. But the later Wall Street dump will likely add to drops in Asia again today. Australia and New Zealand won't be immune. The American drop came after data was released showing consumer confidence actually rebounded in May, but households were a bit more pessimistic about their short-term income prospects, even as they expected strong job growth to persist. And house prices keep rising faster than expected, driven by low inventories of houses for sale. But then the White House seemed to double down on its anti-trade agenda, particularly targeting China, and the Chinese aren't happy. In Italy, the head of their central bank warned overnight about the risks of losing their asset of trust. He's hit the nail firmly on the head there. It is a comment that has not gone unnoticed by markets who have trashed their bonds today, suspecting the voters of Italy have already damaged that trust. The spillover to Wall Street was swift, and the stakes for the euro are rising. In Australia, consumer confidence has taken a substantial tumble, driven by homeowners concerned about falling house prices in Sydney and Melbourne. It fell 3.2% last week, falling for the first time in 7 weeks. And the unintended consequences of the Hayne Royal Commission are starting to be realised by the wider community. There is a growing understanding that its approach may actually trigger something worse than what it was set up to fix. The US Treasury 10-year yield has slumped to 2.79%. That's down 14 basis points as Wall Street reopened after their long weekend break. The Chinese 10-year is at 3.64%. That's unchanged, while the New Zealand equivalent is at 2.76%. That's up 2 basis points. I doubt either of these levels will hold today, given the changed Wall Street mood. And gold is up another $6 to $1,303 an ounce in overnight trading. Oil prices are marginally firmer and holding at their new lower level. They're now at just over $66.50 a barrel in the US, and the Brent benchmark is now just over $75.50 a barrel. In China, natural gas prices are pushing up as regulators push energy companies to reduce coal use. And the Kiwi dollar will start today at just under 69 US cents. But on the cross rates, we're also weaker at 91.9 Aussie cents and 59.8 euro cents. That puts the TWI down to 72.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.